In the 1980s, America saw its mutual fund industry grow 52 times in just 2 decades. Why? Because income levels rose and investors flooded into the markets. Fast forward to 2025, India is now standing at a similar inflection point. Today, we are diving deep into one of India's most exciting and rapidly expanding sectors, the asset management industry. In today's video, we will cover the overview, competitive landscape, growth outlook, and risks. Now let's get started on the Indian mutual fund industry. What are asset management companies? Asset management companies or AMCs are like professional money managers. They take money from millions of people and invest it in stocks, bonds, or other assets to help everyone grow their wealth. India's mutual fund assets are just around 20% of its GDP. In contrast, the US stands at 120%, while the global average is near around 60%. India's mutual fund industry has grown 5.5 times over the last decade, rising from 12 lakh crores to 67 lakh crores in assets under management. Monthly SIP flows have tripled since financial year 2019 to over 26,000 crores in May 2025. These steady contributions, even during periods of market volatility, showcase the changing behavior of Indian investors who are increasingly adopting systematic long-term investing strategies. AMFI PwC study projects mutual fund AUM to rise at 19% CAGR till 2047, taking AUM as a percentage of India's GDP from about 19.9% now to 112%. The same study estimates that the number of retail investors could expand nearly fivefold, from around 55 million currently to 263 million investors by 2047. Let's talk about the different types of mutual funds available in India. Broadly, mutual funds fall into several categories. Equity funds, which invest in shares of companies and aim for long-term capital appreciation. Next is debt funds, which invest in bonds and fixed income instruments focusing on stable returns. Third one is hybrid funds, which mix equity and debt in different proportions. Fourth one is liquid and money market funds, which invest in debt and are meant for short-term parking of surplus cash. And the next one is index funds and ETFs, which are part of a fast-growing passive segment. And the last is sectoral and thematic funds, which focus on specific sectors like technology or healthcare. Interestingly, sectoral and thematic funds have become significant. By March 2025, these funds, along with flexi-cap and mid-cap funds, accounted for 43% of total equity assets under management, showing investors increasing interest in more specialized strategies. Let's now discuss the competitive landscape and peer comparison. India's mutual fund space is competitive, with big players dominating the market. As of financial year 2025, SBI AMC is the largest AMC in India, with an assets under management of 11 lakhs 91,000 crores, followed by ICICI AMC, HDFC AMC, Nippon AMC, and Kotak Mahindra AMC. Now, let's do the peer comparison of top listed AMC companies in India. ICICI Prudential AMC leads with a market share of 13%. HDFC AMC follows with 11.5%. Nippon India AMC holds 8.3%. Aditya Birla commands 5.7% and UTI has 5.3%. When it comes to the number of schemes, ICICI AMC has 118 schemes featuring 42 equity-oriented, 20 debt and 56 passive funds. HDFC has 98 schemes, Nippon has 97 schemes, Aditya Birla manages 99 schemes, while UTI AMC offers 80 schemes. In financial year 25, ICICI AMC has a revenue of 4,977 crores and a profit after tax of 2,650 crores. HDFC AMC has a revenue of 4,050 crores with a profit after tax of 639 crores. Nippon AMC has a revenue of 2,518 crores and a profit after tax of 1,286 crores. In the last 3 years, between financial year 23 and financial year 25, Nippon India AMC grew the fastest with an AUM CAGR of 37.9%. ICICI Prudential AMC followed with 32.7% growth. HDFC AMC clocked in at 31.2%. UTI AMC grew at 19.3%, while Aditya Birla Sun Life AMC saw slower growth at 17.8%. Now, let's discuss the growth outlook of the industry. India's mutual fund industry is poised for solid growth. Here is why. A young population and rising incomes mean more savings. Digital adoption is making investing simpler, especially in cities beyond the top 30, known as B30 cities. Now let's discuss challenges for AMCs. Asset management companies are facing some big challenges. Regulatory keeps squeezing fees and margins. While it is good for investors, but it puts pressure on AMC's revenue and profit margins. The increasing popularity of passive funds like ETFs and index funds are growing fast. They are low cost and increasingly popular, especially among younger investors. That's it for today. If you like this video, make sure to like and subscribe for more videos like this. Thanks for watching and keep growing your wealth with PA Wealth.